Okay, so going through the market update, we have seen, and I'm sure you guys have also seen, headlines like no tomorrow about sales and sales volumes. And the last 3 months, July, August, and September have really been on a tear in Toronto. Much of this has to do with pent up demand that we have, that's kind of been um, uh, disappeared when COVID hit. So if you look through kind of April, May, uh, people were tentative during that time. Now, our investors, our clients that we work with, we were really busy in April and May because they had realized there was a bit of a slowdown in the market and they took advantage of it. But for the majority of people, they're not investors. They're also, they're mostly end users. And so that pent up demand started to realize itself through July when, things with COVID got a little bit better. And so we can see that happening here through raw sales volume. I do expect this, however, to come into a bit more reality in October. And I'll put this out there as a prediction. I do expect October 2020 sales volume to be more in line with year-over-year averages. I don't expect this huge volume to continue until October. The next slide, please. Average resale home price. Also, this has been going through the roof. Part of what is skewing this number, though, is the mix of sales. I'm sure you've been seeing the headlines that single-family dwellings are dominating sales right now, and condo sales are down. And as the shift towards single-family homes, people are looking for a little more space these days. That is driving the average resale home price to the point where they can't even fit it on the slide. Shred it has their bar going into their legend now because it's going through the top. Next slide, please. This is new listing volume, and this is also why I expect to see temperament of the sales volume happening through October. Is that in line with the increase in sales, we have a step-in-step increase in new listings. And while the ratio of new listings and sales has been pretty constant, with there's a catch-up effect, and the amount of inventory is matching that sales. Traditionally, October will start to slow down, and anecdotally, we have seen that the velocity of sales, so like how long it takes from a time a property comes on market to the time that it's selling, that has been slowing down through October. I think, without jumping too far ahead, I think some of this is around anticipation of the, quote unquote, second wave. And I think we're seeing the realization of some of that happening now with, a slowdown in that sales velocity, with product that I would have expected to sell, not selling as quickly or selling for a little less than I expect. And I think for us as investors, it's a really good time to keep an eye on what's happening with the market, because there may be another pause or slowdown in the market. And I'll never say it's a downturn, because fundamentally, not to spend too much time on real estate fundamentals, but if you understand real estate fundamentals, it's driven by supply and demand. Supply being basically your population. Demand basically being your population, and supply being the amount of inventory out there. There hasn't been a fundamental shift in population. It's not like 20% of people who live in the GTA have left Toronto to go somewhere else. So we haven't had a fundamental population shift. Because of that, I don't expect prices to fundamentally change, because we haven't seen a shift in the fundamentals. We may see like a bit of a drop. We may see a bit of a pause in kind of sales prices, and that's along more the lines of what I expect to happen. But who knows how long that will last for? With the first wave, we know it only happened for like a month and a half, and that was before we even understood COVID, before we knew what the exit from COVID would be. And Toronto still only saw a month and a half of pause. So I'm not, I don't have a crystal ball, but I just don't expect the impact of a second wave to be as deep as actually the first wave, because a lot of people have adapted to work from home already, And businesses, I just don't see them doing a complete shutdown again like they did in the beginning of the first wave. Yeah, we'll see how my crystal ball is in a couple of months. Next slide, please. Cool. So then shifting over into the rental data. We're getting some feedback in line. So shifting over to rental data, we'll see this is the national rent rankings, both year over year and month over month. So you'll see this is the average of all 1 bedrooms and the average of all 2 bedrooms in major cities in Canada. No surprise, we are seeing a decrease in rents. This is in line with what we're seeing, kind of across the board. All the headlines saying rents are down, rents are down. But if you look kind of deeper in the numbers, you'll see that's not really a true picture of what's happening across the country, which is why don't just read headlines, look at the data that's behind them. And on the next couple of slides, you'll see that within Toronto itself, it's not the full picture either. I think something else to note is, sorry, if you could go back for 1 second, Matt. This year over year decrease is 12%, which is less than the year over year decrease was earlier in the year. We're actually starting to see a bit of recovery in rental prices. So if you go to the next slide. So this is actually drilling down further into the area code by area code area. So yeah, area code by area code areas. So it doesn't make a very nice map, but it gives you a sense of what is being affected in the downtown core. Now, this is an average across all property rental types. So condo rentals, dedicated rentals, as well as secondary market. Secondary market is stuff that like you and I do. So basically we buy a house, we cut it up into units and we rent it out. That would be listed on secondary market. So if you look, the areas that have really been impacted are those very close to the downtown core, right? So, right in the financial district, just around the financial district, and right around the universities. This is, if you've been following what we've been talking about the last couple of months, no surprise, because we know that universities, they're not having in-person classes. They're having everything virtual. So for a lot of students, it doesn't make sense for them to be living downtown near campus. So those rents have dropped correspondingly. What I'd like to show further is that if you look just outside of the core, so where we've been saying for years to invest. So on the west side there, MG6 and M6J, or yeah, those 2 postal codes on the west side. If you look at those rent decreases now, and this is from January to August, you'll see that the rent decreases are only 0.5% and 0.26%. So the decreases that we've been seeing just months earlier, they've been pretty much wiped out now, with rent prices being almost back to normal in in places like Koreatown, right, where we have some clients investing. So it is very much an area by area thing. Part of this is people are getting out of the ultra tiny condos, boxes in the sky. We've always encouraged our clients that condos aren't a bad investment. They're a good place to start, good place to build a portfolio. But we always try to get you to land because that's where the actual value is. And we didn't have a crystal ball around pandemic, but we had always said that we don't quite believe in small micro units. And I think that's what is evident here now in the rent decreases that you're seeing, because rent decreases are not happening as much in these areas. They have much larger rental units. A house out in the MG6 area code is not going to have the same sort of 400 square feet of living that you would right in the downtown core. So this is part of when you're talking about an exodus from the city, what's really happening is there's an exodus from one area, one postal code to just a little bit over, where somebody can get a bit more space. Next slide. And what we did is we further looked down, we grabbed this information on condo by condo basis, because we were starting to get some questions about some of these details. So if you see, the theme here is we take a macro picture and then we keep drilling and drilling and drilling down so we get a true understanding of what those headlines mean. So we've kind of been talking about since the beginning of COVID that the condos to be worst hit, so first of all, condos have been the worst hit. Of the worst hit condos, the ones that have really taken a beating are those that have been positioned to accept a lot of short-term rentals like Airbnb. And our favorite, our favorite condo to pick on is right there, second from the bottom, ICE condos. With an average 20% decrease per square foot in their pricing, in their rental pricing. But you'll see it's not the full picture. We actually have condos that are a little bit outside of downtown core, again, slightly larger in terms of square footage, demanding higher prices from April to September. So it is a little bit of an exodus from like these Airbnb focused downtown core condominiums, moving a little bit outside to larger condos. Now there's a couple of data points here which I take this information with a little bit of a grain of salt, because you can see Harbor Plaza is listed there twice. East Tower has gone up 6%, but West Tower has gone down 16%. They are literally next to each other. So that said, I think this gives us an overall indication of what's happening, but there are definitely some data points in there which I think don't fully support the theory.